All right, everybody, welcome back to my YouTube channel. Today I have on Zach, and Zach will introduce himself later. His last name I cannot pronounce. I'm not even going to pretend like I know what I'm talking about. But today we're going to talk about something super cool. Before I introduce Zach, we're going to be talking about an article that I've been sent by every single client that I have. And the article reads, to afford a home in Toronto, Vancouver, you need to make at least $220,000 household income with 20% down. So this article has been sent to me, I don't know, every single day.
It's been sent to me as well. It's just like
we're gonna dissect this article for you and give you a little information as to why it's not overly true and what it really means. So there's a lot of clickbait articles out there that are confusing for the consumer. So what we want to do is make things a lot clearer for you and just really give you a real understanding on what's actually happening in the market and what this title means. So I'll let Zach introduce himself.
Zach Lofeudo.
Hey, it's not as bad as you think.
You should have done it a couple times at least before we started, Dave. Zach Lofeudo. I'm with BRX Mortgage, and we're gonna run, as Dave said or mentioned there, we're gonna run what I do for every client, which is a pre-approval before you go shopping. So you can actually break down the numbers and what I actually do for a client. So you're gonna see little behind the curtain here, what I put together when I get your documents together, come up with what your income is and qualify you for a purchase. One thing I think that I want to say, as you were even saying that I just thought about, was that the article, yes, is probably going off of the average detached home price in Toronto.
It's for a $1.3 million home.
Exactly, which majority of people are not buying that as their first home, right? And that's the one thing to always kind of recognize, that there's a difference between owning a maybe second or third property or your forever home as opposed to your starter condo or starter semi-detached farther outside the city, right?
Yeah, the thing is too is that, again, this is for a $1.3 million home, not a condo, a house. So I don't know any first time, I mean, it happens the odd time, but I really don't know any first time home buyers that are purchasing a $1.3 million or above property for their first ever purchase. So we're gonna show you a more realistic property that you can actually evaluate. And we're gonna do like a real-time pre-approval to show you what you would need to make to actually afford a beautiful, amazing condo at King and Bathurst. Not everyone's all in love with downtown like I am, but I think King and Bathurst is great. One thing a lot of people don't know about King and Bathurst is that there is a subway station coming, confirmed already from the city. It's happening. There is a subway stop going there. The bar on the corner has been closed, so they're going to start prepping that soon, which is obviously going to boost property value like crazy. So we won't ramble too much about this.
Are you biased because you live there or something, Dave? Is that
it's the best area in the city.
I didn't even notice while you were doing your mortgage that that's right where you live.
If you don't buy it, I'm buying it.
Yeah.
The thing is too, like, this article has already been, if you actually look back in the history, this article has been put out like multiple times. It's always been like this.
But it's that, and that's what it is. It's like, that's the clickbaitiness that needs to be put out there as well, just to get people to read the article, to get people to share it. As well as, like you just said, it's always been like this. Like, you're not going to buy a $1.5 million home with your entry income or your starter income at your first position at your first company and you've saved up, $40K. Like, it's not like you're just going to blast yourself into a $1.5 million beautiful house before you've moved up yourself in life, even with very generous parents and co-signers, et cetera. Like, we're going to use that as an example because it still does take some income and some savings to get into even a $700,000 condo like the example we're going to use, but it's not as ridiculous or crazy as the articles kind of make it seem like it's impossible for you to ever do so.
Yeah, so for this example, the property we're going to be using, it's actually live on the MLS right now. I won't give away the unit number, but if you want me to send you this property, let me know. It's 111 Bathurst, so it's literally right at King and Bathurst, just north on Bathurst on the east side. Asking price is $729,000. We would get this for $690 if you work with me.
Work with anyone else at $710.
Yeah. So we're gonna go off $690. It's been on the market for 24 days. But with this property, the reason I like it, it's a 1+ den. It's a big enough property. It has an office for work from home space. Layout's really great. I like the layout. It has a big terrace. Maintenance fees are low monthly. It comes with a locker. Again, area is location, is the old saying. So we're going to base it off that. 111 Bathurst Street in downtown Toronto, Ontario.
All right, so I'll take it over from here. And one thing just to note, like low condo fees are fantastic. My condo fees are ridiculous, and every
Mine are up
month
there.
it just makes me sad. So like
Mine are up
that's
there.
like to value a condo as well with low condo fees is super important. I don't think as many people take that into account because it is as important as what your mortgage payment's going to be too, right? If your condo fees are $700-800, then that's $700 that's going to be a constant for you, and it's only going to go up. Whereas your mortgage payments are actually only going to go down over time as you pay them down, right? So just one little anecdote. But as I put in here, so starting off with these property details, we've placed the annual the property taxes and condo fees into this application. So that's generally what I'll do for a specific property. Looking at a purchase price of $690, as Dave said there, your minimum down payment. So this first scenario we're going to go on, if you had the very minimum down payment you could put on this property is $44,000. I'm sure we'll break down why you need $44,000 as a minimum down payment in a different video, but that's what it is. You'd probably need about $15,000 for closing costs as well. So land transfer tax, being in Toronto, it's double. We're also taking into consideration the first-time home buyer. That's why it's 14 or 15K, not more than that. And legal fees, etc., other closing costs. So 44,000 plus about 14, 15K for closing. Your interest rate right now, this is an insured purchase. So right now available, going to be around 3.8% on the variable side. We're using that because it's easier to qualify as well than if you were to take a fixed rate, which is going to be a little bit higher and limit your qualification. You're also limited to 25-year amortization, putting less than 20% down, 25-year am. And that's also...
Amortization is the length of, you should explain that.
Thank you for interjecting, because I like to say things and realize, hey, not everyone knows exactly what I'm talking about. I'm just the mortgage guy who just spews this shit out. So no, 25-year amortization is the length of your mortgage. So generally in Canada, you're going to break your mortgage up into 5-year terms as well. You can do 1, 2, 3, 4, 5-year terms, but 5 years is generally the most common that people are taking. So that means every 5 years you're going to be renewing that mortgage throughout a 25-year lifespan. Now, you're limited to 25 instead of 30 because you're putting less than 20% down in this scenario. Now, going up here to our client here, Test McTest, your annual household income that you would need to be approved for this mortgage is just over $140,000, okay? So that would be to get into this property, again, with the minimum down payment. It is still a substantial sum of money to be getting into the market. But again, this is household income. So that's two people, like a couple making 70 grand each, someone making 80 with a co-signer on that makes $60,000. Like there are other options. It doesn't mean that you solely have to make 140,000 gross annual income.
And co-signer, sorry to cut you off. I feel like a lot of people have this negative stigma around co-signers. Like my mom co-signed for me.
My mom didn't,
good.
But it's fine.
No, like the more properties you own too, like, I mean, it's a lot of... No, like I have a lot of my clients like, well, I want to do it on my own. It's like, well,
yeah, no,
why not get approved for more and get into the property like having a co-signer? And like the co-signer can make a lot less. You know what I mean?
That's it. It doesn't, like, a lot of times you need just a little bit of income to potentially boost your qualification up to where you want it to be. Like, again, we're using a $690,000 property. There are lower, like cheaper properties out there in the GTA, even in Toronto itself. And a lot of the times people's income, if it's 60, 70,000 per year, will qualify them to X. They only need maybe $30,000 more annual income on the file to get to that desired purchase price. A lot of people don't realize that's grandparents, pension income, CPP, old age security. Like those are things that are income we can add to the file. So it doesn't have to be mom or dad that comes on and needs to make 100 grand a year and has a 900 credit score in order to get you qualified. It can be as simple as adding a little bit more income onto the file. But to jump back to our scenario, so this is what we're looking at, minimum down payment. So you're looking at having, 60 grand to get into an almost $700,000 condo, and you're going to need more income, obviously, to qualify for 140. Now, let's switch up this scenario to a 20% down payment, which we're looking at. The closing costs are going to be relatively the same, because that's not going to matter whether you're putting down more or not. but 138,000. I'll make sure my math is correct. That's 20%. And because
I didn't just check his notes.
yeah, I know. I was like, I don't want to screw this up. The pressure's on when the cameras are on. 138K for a down payment. Now, the reason I'm increasing the interest rate here is because you actually get lower interest rates on insured purchases. So a lot of people don't. They're like, well, that doesn't make any sense. You're putting less money down. Shouldn't I be getting a better interest rate? It's not true because in this case, you could still get a better interest rate if you get what's called an insurable mortgage and you stick to a 25-year amortization. But the insurance that you're getting when you put less than 20% down is from CMHC, a government run company that's protecting the lender, not protecting yourself. So then that's why they're actually going to offer you a lower interest rate because they're protected, right? You default, you don't pay. Well, they're like, we're going to give back to you essentially for having this protected mortgage because if anything happens, we're all good. You put more than 20% down, you extend to a 30-year amortization, which I'm going to use in this scenario. You buy something over $1 million, it becomes uninsurable, and that's when you actually get a crappier interest rate because there's less insurance for the lender that if you don't pay, they have to actually default on your home, sell it, etc. Right? Which is worst case scenario. Please, everyone, just pay your mortgages. Don't default. So in this case, we're going to see around 4.4%. Again, we're using a variable interest rate around now approximately what you're going to get. It might be even a little bit lower than that, but we'll use that as an example. And because we're putting 20% down, we can extend to a 30-year amortization, okay? So that is going to, again, because we're putting more money down, it's going to reduce the income that we need to qualify for the loan size, but also because we are changing to a 30-year amortization, that also will decrease the amount of income that we need to qualify. So I'm just going to change to 30 here. Boom, boom, boom. And now we're going back to, Dave's like, I have no idea what's going on over there. That's why.
Just crunch the numbers.
Yeah, that's what he calls me and tells me. He's like, can you just do the thing that you do over here?
I need to crunch the numbers.
So as you can see here, these ratios have greatly decreased from increasing the down payment and also extending the amortization. So now on the same condo, which we've placed 138K down, I got a little too generous with taking off that much amount of income. We'll go to like 120,000. So yeah, even there, it could probably be a little bit less than 120K. So that's combined household income,
each,
60K each with that 20% down. And 138,000 obviously is a greater sum of money than 44,000. But with so many people, bank of mom and dad where people are getting money from, with the increase in housing prices over the last year, even though we're seeing a slight decline in certain places, there's tons of equity there that your parents can pull out of their home for a refi, give you a gift. It's not outer worldly to come up with 130K, sort of, especially if they already own a home and pull some equity out for you to buy your first property, right?
Yeah, that's honestly, it's cool to see that in real time. And I don't think it's nice to see the actual numbers. I feel like a lot of people don't actually fully understand this. And I think it kind of, when you understand, obviously, the more you understand, the easier it becomes to really grasp. And I feel like just running through and having a conversation with you, anyone that's out there that's a first-time home buyer and just completely confused by this process, the amount of times we've hopped on calls together and just walked you through the process to really just simply explain everything. There's a million YouTube videos there to learn from. I like to keep ours very simple language, which we did, because I find when
you check me, as long as I start saying things, and Dave goes, "Wait, hold on."
34 years, 744 amp percentage air am. Just crunch the numbers. Man. Yeah. No, but it does make a lot of difference, and yeah, again, when you're reading these news articles, the biggest thing to consider is just actually understand what you're reading, because a lot of people read news article headlines and then they shut it down, or you're basing your info strictly off of blog.to or Narcity posts. Just actually understand what you're reading, and if you don't, then call us. That's what we're here for.
And there's so many different scenarios where this could work. There's also all different types of mortgage and lending products that that articles are just brushing the very surface. And yes, I'm sure to qualify for a $1.3 million house, we will need 220K plus income and all that, but that's not the articles are almost targeted towards first-time home buyers to discredit them, when that's not what that target property is for, or that's not what that target property is going to be, right?
Yeah.
So
I'm finished designing my Tesla here, so I think that's good for them.
oh yeah, we're good now. Do you want to put it up on the screen so everyone
What do you guys think of this one? But yeah, that's it, honestly. And if you guys are enjoying the content that we're putting out and the content that I'm putting out on my channel, I would very much appreciate a follow or hit the notification button so you don't miss any videos that we're putting out. We're going to try to do this a lot more frequently and get a lot more videos out to you on a regular basis so that you have all questions answered. We're going to stay ahead of the trends and get these articles out and these videos out that are relating to these confusing articles to just really calm our database of clients and make sure that everyone understands what's really happening in the market. So with that being said, we appreciate you watching this video, and we'll get you on the next one.